Ira Epstein of Linn and Associates with your metals market wrap up for this Thursday, and we're now at the 9th of July 2020, and the time right now, well, we're sitting here at about 5:50 p.m. I'm wearing a t-shirt under this. I have no air conditioning in the house till tomorrow, so forgive me. We've got room units, but they're not doing where my studio is, so it's too hot. All right, interesting day. Everybody will say that the break in the stock market during the day was jobless claims. They're not falling dramatically, but I don't think so. I think it was the Supreme Court rulings that came out, because if you look at what time those hit the wire and you saw when the stock markets fell, that seemed to weigh on the market more. I'm concerned that the gold market's becoming a crowded trade. Now, crowded means so many people are bullish that the market just gives itself a correction to flush some out, and that could be what's developing there. Bonds and notes giving back a bit of the morning gain that we saw in the afternoon gain, in fact. And in the foreign currencies, they're slipping a bit against the dollar here. The question is it more than a correction? And that's what we're about to find out. When we take a look at gold, you can see that right now for the week, we're up $17 at 1807.80. This is the best close we've had in a very, very long period of time. When we take a look at where the market's at, you're just coming off a recent high just over the 1825 level, slipping down though at this point, and the pattern is one still, hasn't changed, of a lower low and a higher high, not a trend, as defined by higher lows, higher highs, and an uptrend. So it's not got that. The market is staying well over the 18-day average at the 1778.80 level, but there's a problem. First, the market's unable to stay and just glue itself to that upper Bollinger Band, which means a correction phase could happen. The market has to run back up to challenge that 1830 level if it's going to do what? Keep the embedded slow stochastic. Let me show you something. On the close, you finished with these readings, both over 80. Both over 80 on Wednesday, both over 80 the day before it, the day before it. So, embedded reading. When you lose the embedded reading, and again, this is 10 minutes to 6. We have the whole night to go through. We don't know if it's going to be lost, but if it's lost, it's often an indicator before a price does it, often, that we could be making a run for the 18-day average of closes. Nothing works all the time, but given how crowded the trade is, the type of action here, you could be in for a bit of a correction. Is that a bad thing? Well, let's talk about that. The last break low in the market was all the way here, and that number was 1766.30. If you break from here and you get to the 18-day average, as long as it holds that area, you haven't taken out a previous low. That could be the flush the market does to take out some of these Johnny-come-latelys and don't know how to use stops or momentum. I don't know. I'm not saying it'll even happen. I don't know that either. I mean, I wish I could tell you what prices are going to be tomorrow. But I am concerned. First voice of concern you're hearing from me. Gold-silver ratio continues to favor a correction where silver's a bit stronger than the gold market right now. In the silver market, you have an uptrend. Higher lows, higher highs. Now, the first move up to the upper Bollinger Band was yesterday, and today you broke right back under it. Not a surprise. The markets often fail at that number, and that's what you're trying to do. But let's define failure. Both numbers are not over 80 on the slow stochastic. They weren't over 80, in fact, yesterday or the day before. You have an overbought market that's at a key resistance point and not trying to embed. I think there should be some profit taking place here. Nothing bearish, but wouldn't surprise me for profit taking. Different world in the copper. This is the fully embedded reading. It's like glue. Every day the market hits that upper Bollinger Band. It won't last forever. So remember, I'm saying this. Corrections come out of left field. This has been a heck of a run. We've recognized it. That's the important thing. But not once has it dropped down to try to challenge any lower numbers on the market. So with the weekend coming up, be cautious. That's the word I'm saying. As we take a look at what happened on Wednesday, you can see you got up and over the upper Bollinger Band on the platinum. The first test is generally, and you hear me say it all the time, where I think the pros come out of the market. Not a bad call on my part. Look at how much that market fell. And you're back in the Bollinger Bands and correcting an overbought condition. So needed. I'm expecting to see the pros step into the market around the 839.70 level. I think they'll throw in the towel if you get under 823.20, and they'll try to hold their long position as long as the market stays like this. In the dollar index, yesterday, another challenge of the lower Bollinger Band. You know what I'm going to tell you. After you get a rally like this, it's a challenge again. The 18-day average to get down to the Bollinger Band. It's like a reset. When you get up here, it's a reset. You're looking for the market, if it breaks down to the Bollinger Band, to find support. This is what it did, and this is today. I don't think that I'm off on that. Oversold condition. Because it's oversold, I'm not looking for aggressive selling in the dollar on this particular bounce. Let the market work that off. You know, we have our guide to technical indicators, and I'm going to keep harping on this. There's so many of you that watch me, and I'm not convinced you all understand how to work with the different charts, the chart patterns that are there, how you draw trend lines. I'm not a big trend line drawing guy. I know that on TV they love to do it and show you the wedges and everything. I think that you have 4 or 5 things and that's it, and trying to see those lines and buy against them and sell. I did that early in my career, and I wasn't convinced that they work. I think they're wonderful to display after the fact what happens. But you get all this in our 2 PDF series. It's totally free. Go to www.iraepstein.com. You'll see free offerings. Go there. You can click up here. That'll take you there as well. I'm Ira. You have a great day.